My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be one of my friends just trying to make you some money. My job, not just to entertain you, but to educate, teach, contest. Call me, 1-800-743-CBC, or tweet me at Jim Cramer. This market is not a dog. You can't tell it to stay. You can't tell it to roll over. You can't get it to fetch. Yet somehow people keep imagining that there's discipline to the process, that the action follows clear patterns. For example, when you get a spike in infections, the averages are supposed to get clobbered. And that's exactly what happened Friday. Monday, whole new ballgame. Dow surging 580 points, S&P gaining 1.47%, Nasdaq advancing 1.20%. The bulls look at the spiking number of COVID cases next to the not spiking number of fatalities, and they figure we've made real progress fighting this disease. So it makes sense to buy stocks into any kind of weakness. Buy. We almost got back to even on the Dow from Friday because mortality rates look like they're dropping. Of course, they're buying the recovery stocks now, not the stay-at-home stocks, because of that. The Cramer COVID index lagged today for simple reason. If you believe the spike in infections simply isn't an issue, well, you want to bail on the COVID stocks. I think that's a bogus argument. Too many states are gradually shutting down again. To write this off is no big deal. More on the index later in the show. So what really happened today? Let's go over some of the key parts of this. What's the confluence? First, we have a reason that can actually be time-stamped that turned around the market. This market was taking a header this morning. And then we got a truly incredible pending home sales number. I mean, nobody was really looking for anything special, but it was up 44.3% in May. That is outstanding. At this point, pending home sales are only down 5% year-to-date in one of the greatest recessions we've ever seen. It was a broad-based resurgence, up 44% in the Northeast, 37% in the Midwest, 43% in the South, and it's down 56% in the West. That is pent-up demand, coupled with an unexpected level of resilience, good balance sheets. Second, there was an incredible bounce in some important stocks. On Friday, Nike got trashed after a so-so quarter, where the company was stuck with a lot of excess inventory and weak gross margins. I thought it would sell off again for a second day, given the disappointment that had been the way this market worked. Nope. People can't resist. It's just too good a company. After Nike plunged from 101 to 93 on Friday, they smelled a bargain. It's all about the recovery of digital and the strength that's developing as economies around the world reopen. The future's not the past. Rallies $2.20. Same goes for Facebook. Boy, all day today, all anyone could talk about was that they're finished, right? I mean, got Pancake Friday after a bunch of high-profile advertisers pulled their business, citing a number of controversies where the company refused to crack down on some ugly stuff. Verizon, Unilever, Starbucks, they're all leaving Facebook. So the stock gets slammed from 235 down to 216. Today, though, the buyers came back when it hit the 207 level and then roared to 220 when investors realized this won't even ding the numbers, at least not according to J.P. Morgan, which did very good work on this. The rebound was stunning. I know Mark Zuckerberg's a lightning rod for controversy, but he's got a great business, more than 8 million advertisers. Do you know the consumer packaged goods companies, frankly, haven't moved that aggressively into Facebook's universe? That's why it's not going to be dinged so bad. What else? Goldman Sachs boosted Southwest Airlines, symbol love, with a rare double upgrade. Why? They think Southwest will be the first to launch a major comeback. We know that there are a ton of retail investors who are eager to buy the airlines on even a hint of good news. So they took up the entire group today, along with, of course, their doppelgangers, the cruise lines. If you have to own an airline, it's Southwest. Third, it looks like Boeing 737 MAX might finally get out of the FAA doghouse. They're testing the plane for safety. There's a chance it might be flying again by year end. I know that Phil LeBeau had a piece on later this evening saying that they completed day one of the test. So far, so good. Look, we expect that maybe this plane comes around the same time we get a vaccine. Air travel can bounce back. Boeing was a big part of today's game, but there's more to come. As Boeing goes, so goes Honeywell and General Electric. They have huge aerospace exposure. We've got Honeywell on the show later today. They're changing their stripes. Fourth, remember, there's a rotation going on because we're clearly doing a better job of protecting high-risk populations from the virus in this latest leg of the pandemic. I think we'll probably see still a significant uptick in deaths eventually. Remember, those numbers lag a few weeks behind new cases. But in terms of the mortality rate, it's not going to be as bad as the original outbreak in the Northeast, and that is terrific news. This rotation spurred buying in a host of industries that have been given the back of this market's hand Defense, I like L3 Harris. Remember, we had him on recently. Autos, I like AutoNation and Tesla. Tesla doesn't quit. Healthcare, I like Centene, been big lagger. Retail, it's Costco, TJX, and Dollar Tree, but the buying was indiscriminate. Fifth positive, the banks were able to rebound despite the Fed's not-so-hot stress test results we got last Thursday. I am worried about the banks. Tonight, Wells Fargo announced it's going to trim its dividend. But on days when they can rally, it's fabulous for the market. More on that later. 6, nobody cared about Chesapeake Energy filing for bankruptcy. A lot of people would have thought this would have turned the whole market upside down. We all knew it was coming, though. Meanwhile, the price of crude finished strong, allowing the oil producers with good balance sheets to rally. I think Conoco, Phillips, and Chevron. Finally, there's the seasonal trade. Remember last week we talked about the 4th of July trade? According to Larry Williams, one of the greatest chartists in the business, if you bought stocks today, 4 days before the holiday, and flipped them soon after, you made money 80% of the time over the past 21 years. The odds get even better over the next 3 days. That's a nice tailwind, and there are tons of chartists out there who follow this stuff. Tomorrow, good day. We got good days coming up, according to the Larry Williams' work. Now, when the recovery stocks roar, the stay-at-home stocks come back down. Remember, there's not a ton of new money coming to this market, which means when money managers buy something, you need to sell something else to raise cash. Goldman Sachs raises price targets on a slew of digitizers, and they all got hammered because of the rotation. These stocks have had huge runs. I think it's reasonable to take something off the table, but remember, they're going to come back to them. What hasn't changed? Speculators still love these story stocks, the companies that are too small to mention on air, that have been trafficked in endlessly, particularly by younger investors who can't seem to resist penny stocks and fantasy stocks. I'm begging you, don't do this. Think about it. Does any company set out to have a penny stock? Never. I've studied this over a 15-year period. There was only one big long-term winner from the penny stocks that I could find, and that is it's since been taken over. Similarly, no company files for Chapter 11 bankruptcy for the benefit of their shareholders. The people who own the common stock usually get wiped out. Rare occasions when public shareholders actually get something, but typically that's not how things play out. That's why I think it's a mistake to play around with stocks like Hertz or Chesapeake. The odds are you'll be wiped out. If you need action, so to speak, go buy a good semiconductor company. Go buy an AMD, go buy an NVIDIA, or Micron, which just reported a great number this evening, and I've got the Sanjay Mehrotra on as CEO tomorrow of Micron on Squawk on the Street. Listen, I get the appeal of these single-digit stocks, people. I am a big believer in informed speculation. I'm the only one on TV who is, but that's not what we're seeing. Lots of younger investors have apparently taken some of their $1,200 and gambled it with the stock market, in part because the casinos are closed and there are no games to bet on. It's all about one thing, day trading. You pick the right stock, you get someone to take you out of it, you're a hero. I day traded with the best of them for years. I like day trading. But I always knew the companies very well, and I don't talk about day trading on this show. I hate to see uninformed speculation, and that's what we're seeing now. The buyers have to abandon things that don't work. These companies, some of these companies barely exist. Instead, move on to higher quality businesses with much more legitimate prospects. Unfortunately, I don't see that happening anytime soon. In fact, I'm seeing the opposite. Please do some homework. How's the company doing? Do you even know what it does? How much money does it lose? What's its track record? Come on! The bottom line, we had a lot of encouraging signs today, but keep in mind that this market loves veering from one extreme to the other. Friday felt like the end of the world. Today it feels like we're out of the woods. Tomorrow, who the heck knows?
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.